Okay, so like every week, what we start to do is to look at the indices. We had a very exciting week last week. Uh, the most, most of the week things were moving quite nicely, specifically with the U.S. dollar and most of the other currency pairs. But on Friday, looking at the US dollar as we usually do because it's the granddaddy of all currencies, what we had on Friday was a kind of a turnaround, if you will, in the US dollar. We had a down day in the US dollar. It was pushing towards the high, coming close to the high, which is the 84.10, which was one of our prior momentum highs. That pullback that you see in the US dollar is not a trend change. We cannot use it as if it's a trend change or that the market is changing its direction, but there seems to be an overhead kind of resistance at or around the 84 level. And one day pullback is not by any chance or by any means a trend change. The other strong currency that we looked at from last week, the dollar and the yen were the two major currencies, or the two strong currencies, if you will, that we were looking at from last week. The yen has closed the week at 126.24, which is still above the structural points, but it is within the latest congestion period or the congestion area. And looking at the yen, as I have been telling you all along, this is the strongest currency so far, fundamentally and technically, and we are in a 10-year bull market. So what we had was, again, as you can see, like a kind of a pullback. And what is concerning about it is that we're sitting, between two major structural points, and this is, it's like a serious brick area or a serious zone, if you will, which is between the 126, let's say 32. This is on the index, don't worry about it, and the 125.42. Now, if we do break below the 125.42, we should be looking for a further decline to the downside. But as of yet, we are beginning to get some pullback in the Japanese yen. If you look at the previous daily high, the previous weekly high on the index is the 126.24, which is where we closed right now. 2 weeks ago, the high of the 2 weeks ago was 126.54. This week we have reached the high of 126.65, and we turned back and we closed below 2 weeks high and below 1 week high. This in itself on a weekly base could be construed as a minor sell signal. It is triggering for us a short-term sell signal. So we can expect some further pullback, if you will, or deterioration in the yen, or we can expect a further move to the downside. And what is going to be clear for us that if the yen as an index gets above the 126.32, this is going to be our easy decision. Then this is where we're going to buy the Japanese yen. So in the time being, as long as the Japanese yen is below 126.32, we can expect some further liquidation to the downside. Just maybe profit taking, whatever you want to see, but this is an indication that there is some downward pressure maybe on the Japanese yen and the US dollar. If you look at the Swiss franc, as we have discussed before, the Swiss franc is below the momentum low, which is the 104.35, which was the big structural point, and we are now deeper below the second structural point, which is the 102.62. So the Swiss is still practically in a bear market. I mean, you can consider the Swiss as one of the weakest currency right now. We're looking for it to continue further to the downside. And we are now, as you can see, that this price point, which is the 102.62, is pretty much the same as that high that was set at or around the 2009, November 2009. We do have in the Swiss franc the structure of a bear market. We have failures to make a higher high. We have one structural failure followed by a second failure to make a higher high, then followed by a second structural point. And right now we have closed the week at the 102.06. So therefore, the Swiss franc, as we can see here, is one of the weakest currencies, and it should be one of the currencies that we should be looking at keeping our short position in. So the Swiss is one of the weakest so far, so weakest currency so far. If we look at the Australian dollar, this is quite interesting. As you have seen, as I've told you, we have been trading it all of last week, especially on the Aussie dollar pair. Which is the 101.82. You can see that the Australian dollar, I mean, that here, the 102.24 is a structural point. We have failed below it, then we have tried to fail below it again, and we do have a minor structure that was broken last week, but on Friday we had this turnaround and we closed the week at the 102.26. Having said that, even though the Aussie seems to be setting up in what we call, if you look at this daily chart, it have been failing to make higher highs during this price acceptance zone. It is breaking below structural points and it's just bouncing back up. This is what we call a trend changing zone. This is where the market oscillates between two structural points. It breaks above the structural point, then breaks below the structural point, then turns back around. And as long as we're below the momentum high and we are above the structural low, we are in this congestion, and we should as long as I'm failing to make any higher highs, I should be taking the downward pressure, looking for further declines. And our trade in the Aussie dollar, again, we trade what we see, we don't predict anything. We closed the week at 102.26. Our structure point is 102.24, so we're 2 ticks above that structure point. So as long as the market is playing it this way, we'll be looking to be short-term buyers of the Aussie as long as it's above the 102.24. If it does come below that, or below the 101.82, so first it has to come below the 102.24. Until it does that, we will maintain, let's say, a positive bias for the Aussie. The euro is pretty much the same as the Swiss franc. It is in a bear market. It is technically, as you can see, these are your structure points. It is breaking one structure point after the other, and right now we are at this is the 122.84. This is based on the index. This is not. And the big number that we have for the euro is the 118. And that is where we are right now, and we should be looking for the euro dollar to continue that slide. That is, as you can see here, just looking at this, you can see how many lower highs have been put in place, how many structural failures that have resulted. Every time we break a structural failure, we get capitulation and follow through to the downside. So thus far, this is okay. We're coming now. It is continuing in the same direction. So the euro is one of the currencies we should be looking at selling. Last but not least is the British pound. We have the pound and the CAD I'm going to do. If you look at the weekly chart of the pound, we have been discussing this for quite some time. The pound has been in this narrowing, boring, contracting kind of a triangle. It has no direction. It's oscillating between those two levels, and this is how we should be trading the pound. It is in a non-directional phase. It has been in this consolidation since 2009, but since the prior momentum is to the downside, then the high probability that the break should be to the downside. We do have some supporting factors, fundamental factors, that is short-term supportive of the British pound, and that was basically the demand that was coming in to the UK because of the Olympics and the Wimbledon and the like. So there is a lot of people again buying the British pound, whether for media, whether for whatever there is. But right now, I think this kind of narrow range, if you will, is going to last until the next couple of weeks, until any inflow of currency or inflow of cash that's coming into the United Kingdom should subside, and then we can realize which way the market is going. But most probably it will be continue to the downside. The Canadian also has, for the last 3 days, I mean, it has strengthened basically against all the other currencies. It has strengthened. So the Canadian should be on a let's call it on a supportive area as part of the strong currencies. So in order just to create our hierarchy, which one we're going to be buying or selling, we're looking at the dollar, if you will, and the Japanese yen. So we are going to be kind of neutral to positive on the US dollar. We're going to be neutral to negative or to positive again for the Japanese yen. So this means what? This means that we're going to take any buy signal or any sell signal. In this case, we have an initial sell signal in the Japanese yen. We have an initial sell signal in the US dollar. It is not a trend change, but it could lead to some profit taking to the downside. So, and since we are day trading, we should be looking at that in the same context. The Australian dollar again is pretty much slightly positive because we're above the 101.82 and the 102.24. The ones that we should be bearish about is the euro. The Swiss, and we're going to say that the CAD is also kind of neutral, so the CAD is going to be, so the way we should be planning our trades for next week is primarily to be looking at, oh, I'm sorry, I put the pound, forgot to put the pound. The pound, we're having a kind of slightly positive undertone for the British pound. So we'll be looking at the pound for the long side. We're looking at the Australian also, as long as they are above the buy signal, and the same thing with the CAD. We will be looking to sell the euro pound. We're looking to be buying the pound dollar. We're looking to be buying the pound yen. We can look at buying the Aussie yen, and we should see that the daily, when we go to the spot cash, that these should be confirmed by looking at the currency charts. We should be looking at buying the pound Swiss. We can also look at the Aussie Swiss, and we can look also at the CAD Swiss. So we'll be looking to selling the Swiss in general because that's the key one as a week. We'll be looking to sell the euro also against the pound, against the Aussie, and against the CAD. Since the yen is beginning to give us a sell signal and the dollar giving us a sell signal, we are going to step them away from the euro, and we're going to look at buy signals in the euro yen or the euro dollar, but these will be the last ones to be looking at. So primarily we're looking at the selling the euro pound, as I said, buying the pound yen, buying the pound dollar, and buying the pound Swiss. We're looking at buying the Aussie Swiss and the CAD Swiss. we're looking at buying the Aussie yen, and we're looking at the Euro CAD. We have to be skeptical. We have to be. We're going to look to any reference points that is going to come as a structure point or a short covering point to start. And we should be looking for the pound CAD. As you recall, we had a brilliant setup on Friday. It was a classic short covering trade that appeared in the pound CAD, and we're going to continue with that because and we're going to see what happened with the other CAD pairs in that. So basically that is how we're going to be trading. We're looking at the pound primarily and the Aussie on the long side, and we're looking at selling the Swiss, the Euro, and the dollar on the short side. Okay? So let me save that and